Two German sportswear giants issuing a warning about their Chinese business this morning. Adidas saying that coronavirus is taking its toll on them due to store closures and fewer tourists. The company issuing a new statement this morning saying, quote, "Our business activity in Greater China has been around 85% below the prior year level since Chinese New Year on January 25th. And while we have also seen some traffic declines in other markets, predominantly Japan and South Korea, we have not yet observed any major business impact outside of Greater China." Shares of Adidas are up this morning, about 1.5%. Adidas says they'll provide more guidance on the magnitude of the overall impact on their business when they release results March 11th. But they still hope to reach targets, they say, for 2020 after reporting better than expected results for the fourth quarter. They are forecasting a 10% gain in revenue this year. CEO saying in a conference that the company should be able to fulfill March orders with a 3-week delay, and that outbound shipments have improved in the last 4 to 5 days as ports reopen. The company says that more than half of both owned and operated partner stores are also temporarily closed due to restrictions by local authorities. Guys, Adidas has about 22%, according to analysts, sales directly in China. Nike, for instance, for comparison, has about 16% in Greater China. Both of them make a lot more profit in that market. The last thing that Nike said was that they expect a material impact on sales. Interestingly, supply chain here doesn't seem to be the major concern. It's really demand. And I think it shows you just how much of a growth market China was for companies like Puma and Adidas and Nike. Also, VF Corp, the parent company of Vans, warning as well.
So is the takeaway that the Chinese consumer is going to buy twice as many shoes in the last 3 quarters of the year?
Seems to be what the market's saying, right, by overlooking this.
Though we have nothing from the companies, obviously, on that, and then there's no predicting the behavior of whether that will snap back. I think it's easier to buy the sneakers than services, the revenue lost from restaurants, for instance. So maybe they're discounting that fact there. And the idea that, you know, with all the Chinese liquidity and maybe fiscal stimulus in the form of tax cuts or any other things could actually help consumers open their wallets more. And I think analysts in general are looking at the strength of these brands in China and sportswear in general as a category growing so fast that they're looking at the long term.
In other words, when everyone's
and
affected, they don't lose a competitive stance, because everybody's facing the same thing.
Right. And it's also a big year for sports. I think we have to watch things like the Tokyo Olympics, because this was all supposed to be a huge catalyst for sales for some of these companies, especially Nike and Adidas. And with that impacting the region, that's going to be a key, I think, for when it comes to the numbers for 2020.
But Puma had a good quarter.
Yes.
In and of itself.
Yes,
quite
Puma's
strong.
having a good quarter, and that's why the stock was up.
Right, but what's interesting, of course, is the performance of Adidas. I mean, it is off its recent highs, but it's up over 2.5% on this.
And Nike, too. I mean, it's barely been a blip, even though these businesses are clearly being affected.
We should point out Apple is up 1.1% this morning as well, after falling yesterday a bit on its own warning about its China business.
Yeah, no change in pattern there.
Yeah.
I mean, they're not getting punished for having coronavirus hit to sales, even if the sales continue to climb here in terms of the impact hit.